Welcome to XRP Pro Ledger, and today we are going deep on something that Ripple's president said on CNBC that most people in this community either did not hear or heard and immediately moved past without understanding what it actually means. Monica Long said it clearly. Payments were the base use case, but capital markets, stocks and bonds, security settlement is the logical next place to expand. That statement was not made in a community forum. It was not made in a Ripple press release. It was made on CNBC, one of the most watched financial news networks in the United States, to an audience of institutional investors and professional market participants. And the word logical is doing enormous work in that sentence. She did not say possible. She did not say planned. She did not say we are exploring. She said logical. Logical means the infrastructure is already in place. The pathway is already clear. And the expansion into capital markets is the next step that follows naturally from what has already been built. I want you to stay with me through this entire breakdown, because at the 7-minute mark, I'm going to show you exactly what $320 billion in already tokenized assets tells you about the size of the market that Monica Long is describing, and why the gap between what is already tokenized and what the full addressable market represents is where XRP's structural demand story lives. But first, let us establish what Monica Long's CNBC statement actually means in the context of what has already been built on the XRP ledger. Ripple spent years building on-demand liquidity infrastructure for cross-border payments. The XRP ledger processed millions of payment transactions. Ripple signed ODL corridors across dozens of countries. RLUSD launched as a regulated dollar-equivalent stablecoin backed by BNY Mellon custody and Deloitte attestations. That was the payment space that Monica Long described. And now she is saying capital markets, stocks, bonds, security settlement is the logical next expansion. That is not a pivot, that is a progression. The same infrastructure that moves value across borders for payments moves value across counterparties for settlement. The same 3 to 5 second finality that makes XRP useful for ODL makes it useful for security settlement. The same fraction of a cent transaction fees that make cross-border payments viable make high-volume securities clearing economically attractive. Monica Long is not describing a new direction for XRP. She is describing the next application of infrastructure that has already been proven at scale. Now let us talk about the $320 billion number, because this is the Pantera Capital data point that most people in the community have not connected to what Monica Long said. Pantera Capital's Q1 2026 report documented that the total tokenized on-chain value across all blockchains reached $320.6 billion, up from approximately $200 billion in 2024, representing approximately 60% growth year over year. $320 billion across 593 tracked tokenized assets spanning 11 asset classes. Let me be precise about what this number represents and what it does not represent. The $320 billion figure includes stablecoins, which dominate approximately 91.6% of the total. The non-stablecoin tokenized asset portion, the stocks, bonds, treasuries, commodities, and real estate that Monica Long is describing as the logical next expansion, represents a smaller but rapidly growing share. And Pantera Capital noted something in their report that most community summaries left out. They said the market is still in what they called the newspaper on a website phase, meaning the infrastructure exists, but most of what is tokenized is still a digital wrapper around a traditional asset, rather than a fully native on-chain instrument. That observation is not bearish. It is actually the most bullish possible framing. If $320 billion has been tokenized, while the market is still in the newspaper on a website phase, what happens to that number when the infrastructure matures? When the regulatory frameworks like the Clarity Act provide legal permanence? When the institutional platforms like Ripple Treasury give Fortune 500 CFOs a dashboard to manage tokenized assets alongside traditional holdings? Monica Long said capital markets is the logical next expansion. Pantera Capital's data shows $320 billion has been tokenized, while the market is still immature. The gap between those two data points is where XRP's structural demand story lives. Now, let us talk about what Ondo Finance's numbers add to this picture. Ondo Finance is the leading institutional tokenization platform. On May 11th and 12th of 2026, Ondo crossed $1 billion in tokenized TVL. Then, on May 18th, it crossed $1.5 billion. Growth of approximately 3 to 5% per week, sustained across multiple months. Ondo's CEO has projected $2.5 to $3 billion by end of 2026 on a conservative estimate, with the real ceiling in the trillions if traditional brokerages like Robinhood, Schwab, and Fidelity bring meaningful on-chain allocation. And Ondo Finance has already completed a tokenized United States Treasury pilot on the XRP ledger, alongside JP Morgan and MasterCard on May 5th of 2026, settling in under 5 seconds. The platform that Monica Long says is the logical next expansion for XRP is already processing real Ondo Finance institutional volume right now. Now let us talk about where XRPL specifically sits in the tokenization landscape, because the comparison to Ethereum tells you something important about where the growth is concentrated. Ethereum dominates the overall tokenized market by absolute size, holding the first or second position globally with the largest liquidity pools and the deepest DeFi ecosystem. But XRPL grew its RWA market cap by 124% quarter over quarter in Q1 of 2026. The broader tokenized market grew approximately 33 to 35% in the same period. XRPL is growing its tokenization market share at approximately 3.5 times the rate of the overall market. And the reason is structural, not speculative. XRPL settles transactions in 3 to 5 seconds versus 12 plus seconds on Ethereum L1. XRPL charges fractions of a cent per transaction versus $1 to $50 on Ethereum during congestion. XRPL has built-in compliance tools through authorized trust lines and multi-purpose token standards without requiring smart contract development. For institutions moving large volumes of tokenized securities, speed, cost predictability, and compliance tools are not secondary features. They're the primary evaluation criteria. Monica Long said capital markets is logical because XRPL's technical profile is purpose-built for exactly what capital markets require. Now let us talk about today's escrow unlock, because June 1st is the date of the standard monthly 1 billion XRP escrow release. And the community always watches this date with uncertainty. On June 1st of 2026, Ripple's standard monthly escrow unlock of 1 billion XRP is occurring on schedule. This is the same process that has been running every month for years. Ripple releases 1 billion XRP from escrow, uses what it needs for operational and ODL purposes, and relocks the remainder back into escrow for future months. Historical patterns show that Ripple typically relocks the vast majority of each monthly release. The net new XRP entering the market from escrow unlocks is significantly less than the headline 1 billion number. The community treats escrow unlocks as potential sell pressure. The data treats them as predictable and largely neutral supply events. Now let us connect Monica Long's capital markets statement to the institutional infrastructure that is already assembled around XRP. Ripple Treasury connects $12.5 trillion in corporate payment volume through 13,000 banking relationships to native XRP and RLUSD capabilities. CME Group launched 24/7 XRP futures and options trading on May 29th, permanently eliminating the weekend gap. EDX Markets, backed by Citadel Securities, Fidelity Digital Assets, and Charles Schwab, integrated with Ripple Prime. RLUSD received electronic payment instrument authorization in Japan effective today, June 1st of 2026. XRP spot ETFs have accumulated $1.41 billion in cumulative inflows. And NASDAQ attended Ripple Swell, acknowledging XRPL efficiency for capital markets applications. Monica Long's CNBC statement is not a new direction, it is a description of where the infrastructure that is already assembled is pointing. Now let us talk about the supply picture, because the tokenization growth story only becomes a price story when you overlay it on the supply compression that has been building. Exchange reserves have dropped from 3.76 billion XRP to approximately 1.66 billion XRP since October 2025. That is a 56% decline in liquid supply in under 8 months. Whale wallets controlling 68.5% of circulating supply are holding in private custody. 905 million XRP locked in ETF custody. The tokenization demand that Monica Long is describing, arriving from capital markets applications on an infrastructure that is already live, arrives into a supply picture that has been systematically compressed by every other institutional demand driver simultaneously. Now, I want to address something directly. Because this community deserves a rational voice on what Monica Long's statement and the tokenization numbers actually mean, and what they do not mean. $320 billion in tokenized assets with 91% stablecoins means the non-stablecoin tokenization market is still early. Pantera called it the newspaper on a website phase for a reason. David Schwartz has been consistent about this. The bull case for XRP is built on visible infrastructure and measurable adoption, not on projections that assume instant migration of the entire capital market system to on-chain settlement. What Monica Long's statement tells you is directional. The president of Ripple described capital markets as the logical next expansion on CNBC, not in a community forum, not in a press release, on CNBC, in front of institutional investors. What the $320 billion Pantera number tells you is structural. The tokenization market is real, growing at 60% year over year, and still in its early phase. What XRPL's 124% QOQ growth rate tells you is positional. The ledger, built for institutional speed and cost efficiency, is capturing tokenization market share at 3.5 times the rate of the overall market. Now I want to talk about what most people in this community are getting wrong right now. XRP is trading between $1.34 and $1.35. Monica Long said capital markets is the logical next expansion on CNBC. Pantera documented $320 billion in tokenized assets. XRPL grew 124% in Q1. Ondo crossed $1.5 billion in TVL and already settled on XRPL. NASDAQ attended Ripple Swell. Ripple ranked number 16 on CNBC Disruptor 50. And the community is asking when the price is going to move. Monica Long told you where the next expansion is going. Pantera told you how big the market already is. XRPL's growth rate told you which ledger is winning. The retail market is asking when. The institutional market is already positioned. So let us zoom out and see the complete picture assembling right now. Monica Long, CNBC. Capital markets, stocks, bonds, security, settlement is logical next expansion. Pantera Capital, Q1 2026, $320 billion tokenized, 60% year-over-year growth. Newspaper on a website phase still. Ondo Finance, 1.5 billion TVL. XRPL, 124% QOQRWA growth. XRPL, 3 to 5 second settlement, fraction of a cent fees. Ondo, JP Morgan MasterCard. XRPL, Treasury Pilot May 5th. NASDAQ attended Ripple Swell. Ripple number 16. CNBC, Disruptor 50. Ripple Treasury, 12.5 trillion, 13,000 banks. CME, 24/7 live. RLUSD Japan Electronic Payment Instrument today. ETF 1.41 billion cumulative. Supply down 56%. Whale Wallet 68.5%. Clarity Act August 10th deadline. Monica Long said it on CNBC. The data confirms it on every ledger. The retail market has not connected them yet. If this analysis changed how you are thinking about what Monica Long said and what the $320 billion tokenization signal means for XRP right now, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the move.